Hello, everyone. My name is Bruce Sellery. I am the president of the Canadian Club, and I'm also the moderator of our annual Financial Outlook event, which we held to a sold-out crowd at the Royal York this past January. It was our 43rd event in a row, and it is a gross understatement to say that we did not talk about a global pandemic at that event. We didn't talk about airlines grounded and schools closed and businesses shuttered from coast to coast to coast. It just didn't come up. I don't know how we missed it, but it didn't come up. Here we are in an unimaginable reality. So how do we make sense of it? How do we balance between the fear of the unknown, and there is a lot of that, with our deeply held belief, our deeply held Canadian patriotism that together we will get through this? So we have decided to reassemble our panel from our January event in a sort of virtual Outlook 2020, certainly a version 2.0. And this will be the first in a series of virtual events that we do to fulfill on our mission to engage Canadians in what matters most. It's what we do at the Canadian Club, and it is what we have been doing for 123 years. Interestingly, this is one of, if not the biggest event that we have ever done. Welcome to you all. There's only over 1,100 people who have dialed in for this broadcast. And so I'll ask you to picture what our events normally look like in person. And here we are in our kitchens, in our basements, in our offices, in our bedrooms, dialing into this conversation. You will notice on your screen a couple of things, and I'll highlight the basic technical details. Below the video window, you will see a button that says low feed. You can click on this if your internet speed is low. And these days, everyone's consuming a lot of broadband, so it may be that that's your circumstance. It will reduce your video quality, but not your audio quality. So do that if you're finding things to be slow. There is also a button for questions. When you click on that window, a new window is going to open up, and you can type in a question and it will be sent to me. I will endeavor to include it in our conversation. The third window is request help. Now, this is similar to the questions button. It is a new window, and you'll be able to ask a technical support question, but please keep those technical support questions to this particular event. The question that you have about how to teach your mom how to use Zoom in London, Ontario, you're on your own on that one, I'm afraid, even though my mom's still working on figuring it out. We are hosting this event with great pride alongside our partners, the National Post, and we are very grateful for the sponsorship of EY. Eric Rawlinson is a longtime Canadian Club board member, treasurer, and #1 fan, so we thank you for your support in making this happen. Let me now introduce to you our panelists. Joining us again, Kevin Carmichael, national business columnist, The Financial Post, Matt Gurney, columnist with the National Post, Shauna Sexsmith, senior portfolio manager, Manulife Asset Management, Jean-François Perrault, chief economist with Scotiabank. Unfortunately, Amanda Lang from BNN Bloomberg couldn't join us today. Welcome to you all. Hello.
Hello.
Now, before we begin our conversation, I want to at least honor one aspect of our traditional Canadian Club luncheon, and that is a toast. If you are joining us from home and you've got a coffee cup, a glass of water, or a martini, I don't know, it's noon somewhere, then I would ask you to please raise a toast to Canada. Toast to Canada and to the next 123 years. Now, I want to begin with a question to our panelists before we get into the meat of our conversation, and that is a brief anecdote of your experience of this crisis thus far. And I want to start there because I think it's been an enormous equalizer in many ways. So what have you learned? What has been tough? What has been easy? And I will start. I have a 10-year-old, and her and 3 other friends are joining for a tiny school on Zoom. So the grown-ups, one who's a teacher, the rest of us who are not, are endeavoring to teach 10-year-old children. And I think we have a completely different appreciation of what teachers do. So I'm teaching financial literacy, and my only trick was to go to my funny hat collection and pull out my my money top hat. It was a bit of a hit. It kept them engaged for 5 minutes. So many of you in the working world with kids under the sullen teenage years are trying to balance all that, plus keep your kids at a very minimum entertained. Matt Gurney, to you, what's an anecdote? I know you have kids. I don't see them underfoot right now. How have things been going for you so far?
Well, first of all, I should say hello and hello to everyone watching. And there isn't a really good chance you are going to see my kids. I just hope that, unlike yesterday, they're not beating each other up over the iPad. You know what? The anecdote I would share is one that I think we're actually going to have to take a really hard look at in the aftermath of this. I'm an introvert who works from home. Like, the dislocation to my life has not been huge. I feel very blessed that, unlike other people, my employment has continued. There hasn't been big hits to my routine. However, I returned from travel from the United States right at the moment that this was all starting to happen. We changed our travel plans a bit to get home, but it was only a couple of days after we returned that things sort of really exploded. And my family and I, we walked through Pearson Airport like we own the place. And this was right around the time when the federal government was repeatedly trotting out Bill Blair, the public safety minister, and he was assuring Canadians that there was enhanced airport screening. I arrived from the United States on a flight, walked through Pearson Customs, and the enhanced airport screening was one question at an automated kiosk that asked me, am I returning from Italy, Iran, or China? I honestly answered no. It printed out a form, and we handed it to the border guard, and he said, welcome home. That was the extent of our border screening here. So right now we're in the midst of the crisis, but when this thing is over, we're going to have to look back and ask ourselves if our front-facing defenses were nearly as good as we thought they were.
Shauna, for you, what has been your experience thus far?
So my experience is I'm an office person, and I interact with my team and my colleagues all day, every day. So I miss them, just to interact face to face. But because we've been on Bloomberg chat all day long, we're actually chit-chatting probably a little more, right? Like we're very disciplined about our morning meeting. And then we obviously have all sorts of, chatter going all day long. And I think that's sort of been the replacement for the personal in-person contact. But I have one other thing I wanted to mention. This is an insight. This is a deep philosophical insight. As a consumer of science fiction, movies, TV, novels, and knowing the various things that have been written over the decades, particularly since the Second World War, why is it that none of the writers that were writing end of the world scenario, social disorder and breakdown, including the most recent Contagion movie, why is it none of them got it right that there would be a run on toilet paper?
That is clearly going to be the major through line. The blockbuster that James Cameron directs that outlines this point in time. That is true. Kevin Carmichael, for you.
Me. So like Matt, I work from home and like Matt, work too much. So I've been practicing a version of self-isolation for several years now. So it took me a little while to realize that the world was changing around me. But that's struck home, I guess, when suddenly my home office turned into a WeWork space where I had to share it with my partner who was sent home. That took some getting used to, but a turning point, I guess, came last week when we avoided a major meltdown over whether it was Tuesday or Wednesday. That was on the verge of being a major fight, but we staved that off, and I don't think we've had a serious argument since. So things are turning around. Things are looking up.
Certainly are being tested and hopefully strengthened, but tested certainly. JF, for you.
Well, I've got 4 kids, and like all of you, been working from my home in my office for the last week or so, and never really quite appreciated the extent to which my kids can be loud. And hopefully you won't experience this, but I can't make any promises. But actually, on a slightly more serious note, one of the funny things about this entire process is, we're self-isolating, we're social distancing from each other, in a sense becoming more private. But I find that through my work, using my computer as much as I am, using my cameras as much as I am, that I'm actually giving people insight into my life, my private life, much more so than I've ever done in a work setting. So that's it's a bit of a new thing for us.
Yeah, and for those of you who haven't noticed, behind JF are what I thought were cacti. Like, really the fancy word is succulents. He has informed me that no, they're gorgeous houseplants that have just suffered under his care. So Well, you don't have any time to do anything but work now, JF, and maybe throw a bagel at your kids every once in a while. We're going to begin with you. And in fact, we're going to do this conversation in a bit more linear fashion than we might normally, given the ground that we have to cover. And certainly the economic ground is number one. JF, I'm going to ask you for the best case, the worst case, and the probable case in terms of economic impact. And I know that that is like completely made up, but you and your team have to plug little numbers into something somehow.
So the best case is, I think generally people's base case, which is, clearly the shutdowns and all the virus-related changes in behavior having a very, very significant impact now, will continue to have an impact through the second quarter. And the hope is that as we get to the third quarter, that a lot of this is behind us, that we've kind of contained it or managed the virus in a way where we can kind of, restart the economy and go on with our lives. In that kind of a scenario, in Canada, you're looking at, a fall in activity of about 4%, so a pretty significant drop. Our sense is if you don't get this under control, if you've got extended shutdowns into the third quarter, you're adding, another probably 2 percentage points to the decline, so up to 6 percentage points. But both those scenarios assume that you get it under control at some point in time. If you don't, and there is no rebound in activity in the fourth quarter or the third quarter, if as you restart the economy, if you don't get that restart, then you're in a period of much more prolonged growth or declines, and that could extend, possibly till next summer until we have a virus, a vaccine. And that's a really scary scenario, right?
Employment numbers are visceral. You can picture the human beings who are no longer receiving a paycheck. Can you answer the expectation on the jobless number, both in percentage terms today versus 3 to 6 months out, and what that means in terms of numbers? Like we see the headline on 1 million jobless claims, but put that into context for us. Where could things head based on your middle case?
So, right now we think, so unemployment rate's basically below 6%. Obviously in real time it's higher than that, but we have data for last month. We've seen a tremendous increase in the number of unemployment claims. The Prime Minister talked about close to 1 million this week, 500,000 last week. These are off the chart strong numbers. We think right now the unemployment rate might peak around 10% sometime in the second quarter. Now that is probably a little low given how much we've seen of an increase in unemployment claims. But certainly you're looking at a world in which you have many more million people unemployed in the next 2-3 weeks, possibly longer than certainly a month ago. And of course, way, way, way higher than we thought earlier this year when this was not even on the horizon.
Kevin, I want to ask you, because you talked to lots of different people about this stuff, and I want to ask you about the Liberal government's response thus far. In dollar terms, it is dramatic, it is unprecedented, it is moving a mile a minute, and programs are changing by the day. How would you characterize what has been done and what difference it could make?
So my characterization is probably that it is dramatic, as you said, but arguably not dramatic enough. Canada is trailing behind many of its peers. I would say, roughly a week or so behind, putting like serious money on the table to calm people down, to actually show people that there's some expectation of relief rather than telling them that there's a reason to be. Reason not to worry or not to panic. So there's that element. I hesitate to throw that criticism around too much. It feels a bit like armchair quarterbacking at a time like this, but there has been a bit of a lag. So there's a fair argument to say that they could have gone bigger, faster. Otherwise, I would say at this stage that they're hitting the right notes, but maybe not hard enough. They seem most of their efforts so far are directed at individuals. That's probably positive. Most people say that's the right way to go. But I think there's a risk now that they haven't done enough to assure business that they don't actually have to lay all those people off and send them to the unemployment lines. So there's definitely priority one is to flatten the health curve, but maybe not enough has been done to date to flatten the jobless curve.
JF, your take on that? I mean, the headline number is in the $80 billion range. How much of the pasta in the cupboard does that use? how much more pasta or ammunition remains in the cupboard for the federal government?
I think there's quite a bit more pasta in the cupboard. I mean, right now we estimate that the deficit this year, based on measures that have been announced so far, we'll run into the $110 billion range. So to put that in the context, at the peak of the financial crisis, shortly after the financial crisis, when we launched these stimulus programs, our deficit peaked at $57 billion. So already twice where that is, and I think we're going to go significantly higher. I wouldn't be surprised if we ended up with $150 or $200 billion. As Kevin says, the government, has been a little bit slow in responding to developments over the last 10 days or so, and we are going to see measures to support businesses. No question about that. More of those. We are going to see more measures to support households to make sure they don't, they don't want for food or are still able to maintain, monthly payments, and that is going to require, I think, a lot more money than they've already put out.
I want to ask you, JF, about the economy in the U.S. We're going to get to the political angle with Matt in a couple of minutes, and that's a whole other thing. But what is your prediction for the slowdown in the U.S.? Because we know that our economy is inextricably linked, and looking at the headlines there, it's scary.
Yeah, so it's scary everywhere. I wouldn't say it's necessarily scarier in the U.S. now than it is, say, in Europe or even here to some extent. But clearly, the U.S. is going to suffer tremendously as a result of this, just like we are. So while we're expecting something like -4, a little bit more for Canada, we're expecting something like -2, a little bit more for the U.S. And that is, I would characterize that, however, as a reasonably optimistic scenario in the sense that, the Americans aren't being as aggressive as we are or other countries are in terms of containing the virus. So the economic damage, while it's, to some extent front-loaded in Canada by nature of the things that we are doing to try and stop it in its tracks, and we'll see how successful we are there, the Americans aren't there yet. You've got New York shutting down, California shutting down, some other states here and there shutting down. But they are taking this much less seriously as a nation than we are, and that means that the economic damage is likely to be greater if they don't smarten up quite soon.
Shauna, I'm going to come to you in just 1 second on the market. But before I do, JF, just one last question on the global economy. China was the first hit. There are some encouraging signs that they're flattening out. At the very least, there are tourists walking sections of the Great Wall again, which I don't know if that's good news or bad news. But what is your prediction for China?
So we think China right now is going to grow about 3%. So which sounds great from a North American perspective. But China's been growing 6 or 7% for the last few years, and it was growing at 10% before that. So 3% in official Chinese statistics is a disaster. There's no question about it. It's a very, very, very significant shock. And I think what's interesting about China, is, and in fact, some of the Asian countries in general, is that, very aggressive containment measures seems to have flattened the curve in their case. But just, what we've seen over the last few days, however, is there seems to be a pickup in cases once again. So they've perhaps relaxed things a little bit too soon. Certainly see this in Singapore, some elements of that in China. And that's just it's kind of the canary in the coal mine, right, for countries like us, where, we want to keep things shut down as little as possible to limit the economic damage. But there's a risk, and we're seeing that maybe unfold in Asia, that if you relax a little bit too soon, if you're too comfortable with what you believe to be the success of your policies, you may end up in a much worse scenario.
Shauna, you have managed money through lots of corrections. This is your first big market decline. Maybe it's different, but it's certainly not your first. Tell us what it feels like for you right now.
So every correction or bear market has its own characteristic, right? Be it a collapse in a sector like the real estate sector or technology, or the last one was the financial crisis. The difference on this one is this is like the ultimate exogenous shock, right? This is aliens from outer space, right? And the stock market likes to analyze things. It likes to quantify things. It looks at economic data and, purchasing managers index, unemployment rates, ISM numbers, interest rates, blah, blah, blah. It takes all of that data and analyzes and crunches, and then it comes up with valuations. So that's what the market does. But when you got the coronavirus, which, as I said, ultimate exogenous shock, was unanalyzable. And if it's unanalyzable, it's uninvestable. So as a result, I think that because of that reason, we had the fastest correction I've ever seen. And bear with my glasses for a second here while I read you some numbers. But the high of February 19 to March 23rd, the Dow was down, the S&P 500 was down 34%. So that's in 23 trading days, down 34%. By contrast, the technology bubble was down 37% over 18 months. The financial crisis was that was worse, down 57% over 18 months. And even the bear market of eons ago of 80 to 82, down 24% over 16 months. So this volatility, and just to give you an example of volatility, year to date, we have had 27 trading days out of 59. So that's just so far this year, where the market has been up or down more than 1% versus 37 days for all of 2019.
So all that historical context, super insightful. How much pessimism do you think the market has priced in?
It's priced in a lot, but there's still a lot to be known. I think another one of the reasons why the market reacted so negatively is that it was great that the Fed acted quickly, but we know that this is a virus, and we know that interest rates don't really have an effect on germs. Fair enough. So that's, again, became unanalyzable. So that's why we had that experience. So even now, what we're looking at is how is the market reacting to the stimulus? And it's, I think, trying to assess the numbers like, how do we flatten the curve? Where does the peak come? And it's a moving target every day. We're working with different numbers. And I think one of the problems, and JF just put the finger on this before, a lot of the response has been piecemeal, right? China went all in. When China covered it up for a while, then when it realized it had a problem, it went all in and completely shut down Wuhan and Hubei province. Whereas the rest of the world's done a little this, a little that. Even in the US, not all states are locked down. So by doing that, they're creating problems in terms of that uncertainty, because I think they're prolonging the problem.
There is no real visibility on the economy, on corporate earnings, on investor sentiment, certainly not in the market. So I'm still going to ask you the toughest question, and that is the stock market rebound, when it comes, is it 20 years out like 1929? Is it 6 years out like 2008?
No, because ultimately, all right, so all of this stuff, that I've laid out is pretty nasty, but ultimately, I have tremendous faith in the scientific and medical community that we will come up with a virus, that we will have treatments, and that we'll get the capacity in the hospitals to manage this. Because remember, the whole thing about flattening the curve isn't about, it's about trying to slow the spread of the virus. It's already out. It's out of the box. It's out there. It's going to come back. So we just have to build up that capacity in the system. So back to your question about the rebound, I'm going to say it's for the stock market, right? I think that was your question. More than a year, less than 6. So let's say 3 years to get back to previous highs, because this is short term and temporary. But we'll have some damage on areas.
Started buying back into the market, and if you have, what are things that look relatively more attractive in a very difficult landscape?
So first of all, my clients are institutional, so the maximum cash I could go was 5%, which I was, right, about a month ago. And so recently we spent half of that, but we've also done some moves within the market. The oil sector is a separate case, and I know we can talk about that in a minute, but the oil sector in North America is not where I'm going to put any money, and I would not recommend putting any money there. I think when you think about the strongest rebound, it's going to be in those areas that are hardest hit, that consumers are going to want to come back to. So go back to the restaurant stocks, consumer spending, even the airlines, all of those things that are basically, frozen now. People still want those services and those goods, and they're going to come back and forth when they finally get out of the house.
There are going to be many more headlines in the weeks and months to come, but some stories seem predictable. So things like consolidation, where, when, how, dividend cuts, where, when, how. On those two and any others that we can predict will be the headlines, at the top of the Financial Post, what would they be?
So consolidation's always a theme when you have lower interest rates. Right? I mean, it's been going on for decades, and it will continue to go on. So anybody who's got a strong balance sheet, right? Because remember this, the other side effect of this whole virus and the economic impact is whether or not we've got liquidity and credit markets functioning. So anyone who's got strong balance sheets will be able to use the credit markets to do consolidation. So that'll continue. I think dividends. I don't see dividend cuts in Canada so much, particularly not in the banks, but there's definitely going to be a slowback in earnings and a slowdown in buybacks. On the banks, Canada has certainly for 12 years talked about the strength of our financial services sector. You don't believe there'll be dividend cuts there. So it sounds like you're pretty optimistic about how the banks are holding up. Well, at a 4 to 5%, 5.5% dividend yield, that's pretty decent compared to, sub 1% long-term bond, right? So if you think the banks are going to survive, why not? You're getting paid to wait. I want to ask you about the oil and gas sector, and then I'm going to move to Matt on some of the political stuff. You referenced your concern about this. We talked in January about the large caps. The large caps, even those have fallen dramatically. Cenovus down to like $2 to $3. It's unimaginable. How much of the TSX decline is connected? Well, I mean, so much of it, I'm asserting something that is simple. So much of it is connected to that massive decline in the oil price. Yeah, but we've got other sectors that are down a lot. Nobody got out unscathed, right? Real estate sector's down 30%. Financials are down 23%. No one got out unscathed. So the oil and gas sector the energy sector is a big chunk of it, but the oil and gas sector, the producers themselves are now sub 3% of the index, right? And going back to January, oil, WTI, was over $60, right? And WCS was over 40. So now we're looking at oil at WTI $23 and WCS sub 10. That's not an economic number. The problem that the market is happening now with just the energy sector in general in North America is, again, we're going back to something that's unanalyzable, and that is two dictators that are not accountable to shareholders. They're not accountable to an electorate. They've got bodyguards 24/7, and they've got a grudge. So again, not analyzable, not investable, and at this level, they're all bleeding cash flow. So Matt, we're going to come to your questions in a moment, and I appreciate you sending them. If you've sent one, I promise I will try and get to them as the hour progresses. But first, let me come to you, Matt, on the Canadian political story. What is your assessment of how Trudeau and the Liberal Party has handled things so far?
On top of my assessment, we can also look at the Canadian public's assessment. They're up in the polls. I mean, that's just a really easy way of saying that. Should they be? Well, we can debate that. But Canadians thus far are showing that they have been reassured by the government's performance. So we should ground any of our conversations in that. I think they are doing, in general, a good faith job. But I think, as some of my colleagues here on the panel have said, it has been a piecemeal response. And I think one example of that is that almost every day for the last 2 weeks, there has been some new announcement that could easily have been made the day before if the decision had been reached. So I haven't seen yet that we've hit a phase of this where the government feels it itself has caught up, where they feel that they're on top of this. I'm not going to wade too deep into the economic matters here. I'm outgunned by the other panelists here. But when we look at the scope of this, when we look at the economic impact, the societal change, the political change. I think all of the economic measures and descriptions, comparisons, historical precedents, they all fall short. What we're looking at here is a society that essentially has been hit by a surprise attack, except there's been no actual infrastructure damage. So when we're ready to restart the economy, like our ports and our bridges haven't been bombed, we're just not using them. You know, Shauna was just talking about oil. Has anyone driven their car in the last 2 weeks? Like, it just in terms of the consumption of this, right? Like we are reducing our economy as rapidly as we can to really basic first order principles, where we're looking at keeping the power on, sanitation, healthcare, security, public health, and food supply. So in terms of the government's response to this, absolutely, they're going to need to focus on some of the economic measures, and they're going to be rolling those out, and we'll see whether that matters politically. But I also think I don't know how to even begin to conceive of the political ramifications of this, because there's one thing I want to mention, and I mean, God forbid we find ourselves in this. Many other national governments around the world have seen infections either in their executive or legislative branches. We could easily find ourselves where parts of our government or even the public service are effectively paralyzed. We have a federal public service right now that is dispersed across the capital region. Everybody's working from home. I don't know about the rest of you. I'm having a really hard time placing cell calls right now. Our telecommunication networks are overloaded. So you take a few 100,000 civil servants, send them home, and then you crash the internet because we're all using Netflix at the same time. Our capacity to respond to anything at a federal level is frozen. And that's, again, assuming no deaths. That's assuming no physical infrastructure damage. We're talking about communication difficulties. And I hate even to bring this up, but I should remind you all, we have a minority government right now. Like if we had a federal government that was in a majority, whatever party, they could kind of go for the duration of our term in office. We're going to operate as an emergency government. We're going to ram through stuff as needed. Well, we saw earlier this week that the intention to have unanimous consent to get some of these emergency measures passed almost imploded, and it took a marathon all-night parliamentary session to come up with what we ended up getting. So I think right now we're still in the crisis mode. This is likely to continue for weeks or even months. It won't be till the end of that we really start to have a bit of a political reckoning. But I think, like I said before, whether it was how prepared we were at the border, whether our medical stockpiles were good enough, there are going to be really hard questions that get asked when we're able to ask them again. And I don't know what those answers are going to be.
So, Matt, one of those hard questions, I'm going to ask this of you first. I will ask it second of Kevin, and that is the tension that exists between public health and the economy. For some people, it is very, very clear. It is 1,000% about public health. And for others, there is the nuance that we need to layer in the interests of business, small business in particular. And then further over there on the side are politicians that are 100 miles, couple hundred miles south of us, who have a much stronger view of the importance of restarting the economy, perhaps well before that is appropriate to do so. Through your political lens, Matt, and then Kevin, I'll look at it through your economic lens. How do you see that tension unfolding?
Well, I can feel it unfolding in like the few cubic centimeters inside my own skull. I mean, my political libertarian streak is colliding headlong with my national security hawk. And I don't honestly know how we start to balance this. Normally, the kind of measures that the government are talking about here are the things that I would reflexively oppose because of my political beliefs. And now I'm in the position of wondering if they're not moving them fast enough. Like, there are no atheists in foxholes, and I'm not sure there's many libertarians in a pandemic. So as we watch this unfold, there is absolutely this discussion of getting the economy fired up. I am incredibly skeptical on that. I think it's one of those good ideas until you actually take 30 seconds and think about it. And I know a lot of people have proposed isolating the most high-risk element of the population, elderly people or people with compromised immune systems or known respiratory issues, and basically allowing the rest of us to get back to work. Yeah, the problem is this is not just about people who are going to die. This is a virus that is very good at making people very, very sick. And a 30-year-old who goes into the workforce, they're statistically, they're not likely to die, but they're statistically quite likely to end up in a hospital, taking up a bed on a ventilator that someone else might end up needing that ventilator for. People are still having heart attacks. they're still having strokes. And when this thing is over, I would imagine we're going to see some causes of death have dropped. I can't imagine there's very many car accident fatalities right now. But there are still people who are having medical emergencies, and you are not going to be able to restart the economy against a background of overwhelmed hospitals. You just can't do it. Psychologically, we will be cautious and risk averse, and no politician will be able to last long when the 30 and 40 something start ending up on ventilators.
Kevin, your perspective from an economic standpoint. Our former president, Andrew Graham, is the CEO of a company called Borrowell. And in a Twitter comment he made, he said, yes, absolutely, public health first. But let's remember that small businesses in particular are very fragile.
Yeah, absolutely. So just to pick up exactly where Matt left off, I mean, I think that there is certainly the risk that the public health element of this will last longer than we might anticipate at this point. Of course, it's impossible to know. That's why it's extremely important to essentially put as many companies as we can on life support, so we can get through this this early stage to at least give us an opportunity to assess how long the economy might be effectively shut down. I mean, I think something that caught certainly the Bank of Canada a bit by surprise in the aftermath of the financial crisis, for example, was we didn't sort of see the pickup that we thought or that they anticipated seeing when the global economy came back, because there simply weren't enough companies left to take advantage of that resurgence of demand. So I think what we need to do is throw as much money as we possibly can at this situation to keep these companies alive. And then they will be in place if the best case scenario, and like JF said, which most everyone's base case scenario is that this should turn around. It's going to be brutal, but it should turn around relatively quickly. So if those companies are alive, then that will allow the resurgence to come. But if we hold back, too many of these companies are going to fall away and they might not come back. And then so we'll have less of a productive capacity to bring about the resurgence.
JF, we're going to go to the questions now that we're receiving online. The first one is from Brian. He asks, what do you think will happen on mortgage rates? So I'm going to ask you to address that. But second, and perhaps with a broader application, is what's your expectation on real estate in the GTA in particular? Because that was our topic of great obsession. I mean, for years, but certainly in the past 6 months, everybody's been looking at what might happen with the spring selling season. And as low as rates are, I can't see a lot of people. I don't even think you can go to open houses anymore. There's not I don't know what the activity would be in that particular sector. So I know that's a two-parter: rates and then real estate as a sector.
So on mortgage rates, excuse me, I mean, long-term interest rates have fallen dramatically, right? And mortgage rates have generally followed those. Obviously, at the short end, we're still anticipating the Bank of Canada will cut interest rates more. And as a result of that, probably a decline in prime and probably a decline in variable rate mortgages. So, short end, maybe a little bit lower, but long end is probably already as low as it's going to go. Now, in terms of what it means for markets, well, the fundamental issue in Toronto and still other parts of the country remains that there is much more demand relative to supply. And what we're seeing obviously now is probably limits on what supply is going to hit the market, because either firms aren't building anymore or folks aren't going to list their homes because nobody's going to visit them. And the same thing on the demand side. So our thinking is that, we're probably going to go through a period of a few weeks, maybe a couple of months, depending on how long these interruptions are, where there probably is much less activity than you would typically see in the spring market. And that's obviously normal considering circumstances. But as that lifts, as folks life goes back to normal, there still is this unmet need for housing nationally that will need to be met. And you combine that with very, very low interest rates, you're likely to see things pick up reasonably significantly as, we gain confidence that we're in a better state of the world.
Shauna, this next question I'm going to direct to you, given that it does affect publicly traded companies, and it is this. Can you speak about the supply chain that provides adequate food supply to Canada? Can we be anticipating shortages and ramping up Canadian production of food? Now, I know that you might cover Weston. That is do we have enough pasta in the cupboard as humans to consume? But I want to broaden that out to get your take on the supply chain for grocery retailers, but also car parts makers and any other company that's requiring materials from somewhere else in order to make their factories go.
So this actually speaks to one of the comments I was going to make about lessons learned, is that the emphasis on efficiency and productivity has driven developed economies into just-in-time inventory, and you make it and you send it and you need it right away. So I think in the long run, spare capacity is going to be a good thing. Now, how much spare capacity we want to have as an industry, I think every company is going to, come to that own conclusion. On food, I think the real issue is that the hoarding that's been going on. You can't find a chicken in the store. I mean, as far as I know, food production is continuing as always, and that it is an essential business, right? Farmers haven't been told, to not produce. So I'm not so concerned about the availability of food in general. I'm more concerned about people's behavior. So if they calm down a little bit, I think we're just fine. But longer term, the consequences of not having spare capacity is one of the things that has sort of been laid bare here.
Shauna, this one is also for you from Ryan. We hear constantly about industries that are getting hit very hard. I'd like to get your thoughts on what industries, short or long term, will do well to mitigate the crisis and lead us on the road to recovery. What would you say about that?
Well, I think, what I said earlier about, if you have a longer term horizons, because the thing is, everything we're talking about is, in the current panic crisis mode, which I don't think anybody thinks is going to go on for years. I think we've got a short-term outlook that's awful, a medium-term outlook that's okay, and then a longer-term outlook that's everything's going to be fine. We survived all these other crises before. So, go back to your investing 101, look at companies with strong balance sheets, with a product that has a strong moat around it, that's got strong demand. And currently the most constrained sectors are the consumer sectors. Like small business, you can't invest in, right? Like we're investing in publicly traded markets, but the consumer sector, the consumer discretionary, I would definitely go big there. Information technology. I mean, I think we've all witnessed through our variability to have this call today shows that technology is a wonderful thing in our society. And then, cautiously step on some of the things like, airlines and financial services are okay, but I don't think they're going to have the biggest lift off of this.
Kevin, this one's for you from Jennifer, and it is a question about the Bank of Canada, specifically Stephen Poloz. So it's very simple. Will he extend his term? Will his term be extended? What's on that, and what the street would say, either pro or con to that?
Sure. Well, Poloz got that question earlier this month, and perhaps as a bit of surprise to everyone listening, he was fairly easily said that no, he had no intention of changing his retirement plans. He had great confidence in the team around him at the Bank of Canada. They operate as a team. So he's at that point 2 weeks ago. So who knows? But at that point, he felt that there was no need for him to stay. Whether that lasts throughout, I think that's really a question that comes down. That's a question ultimately for the finance minister and the political system, and whether they have the bandwidth to make the choice of who they want to succeed Governor Poloz over the next few months. I doubt very much that that's a choice that they wouldn't want to sort of have go their way. So perhaps, given the circumstances, they would ask the Governor Poloz to stay around a bit longer so they could give himself a little more time to put the person they want in that job for the next 7 years. But I guess given what we know now, I have to assume that the governor is going to retire in early June as intended.
JF, to you, this question is from Shubham. He wants to know, or he or she wants to know, in regards to the Canadian auto industry, what are some of the potential impacts of the current economic situation? And I ask you that in part because we know that was a big theme in the financial crisis in 2008. I ask you because of jobs, and I ask you because of international trade. There's a lot of variables just in that one question.
Well, I mean, obviously, the immediate impact is that the automakers are shut down, right? And they're expected to shut down until, I guess, the end of next week or the 30th or towards the end of the month. There's a question as to how long that lasts. I'm currently thinking that, it's probably going to last longer than the current plans are, given how, the aggressive the virus progression is both in Canada and the US. So there's that short-term consideration, which is clearly, they are suffering like everybody else. The good news is, I guess, is that they are in significantly better shape than they were in 2000 and 2009, so that there's less of a concern about the viability of the industry. If at some point we're allowed to buy cars again, because of course we can't really do that now. So it entirely depends on how quickly things come back. But the backdrop is very, very different than what it was last time around, in that, there is, two things. The industry is more solid, so less spare capacity, more streamlined dealer networks, but also governments are much, much more aggressive in providing financing and crisis management tools right up front, as opposed to waiting for things to happen, which was the case in 2008, 2009. And hopefully that makes things a little bit easier to manage for all businesses.
Matt, this one's for you, from Marlene. What do you make of what's going on with Trump? That is a very broad question, and I'm going to ask you to keep your response to, a minute or two, given that you could go in 12,000 different directions on that front. But what's your smart commentary on what's going on?
I think the president, and you can take this statement in any number of ways, I think he's very true to himself. And I've been saying this since even before he was elected. He's an almost refreshingly transparent individual, in the sense that he doesn't often surprise you. And I think his reaction, if you had said a month ago, what happens if this epidemic in China comes to North America, I don't think anyone would really be shocked to see that his response was first to insist that things were going great, and then to immediately pivot to "it's not my fault." And I think we've seen in the press conferences in the last couple of days, and I had said to friends of mine on the weekend, the next shoe to drop for the president will be him talking about how this impacts his political fortunes. And we've seen it this week, where in response to questions about, like, hey, how should the American people be feeling right now? Like, I just give us like an emotional commander-in-chief moment that any previous president in history would have easily handled. And he immediately spun it around to, why does the media want to destroy my political career? The president only sees things through the filter of his own self-interest. Sometimes that self-interest happens to align with either the country's or broad segments of it. Sometimes it's just his own self-interest, and he has never previously shown a desire or a willingness to manage beyond that, and he's not doing it now. I think whenever the president finishes speaking and Vice President Pence starts speaking, I feel like I've slipped into an alternate reality, because the same political party, the same administration, the exact same crisis, and the answers are completely different. It just speaks to the measure of the men.
JF, from Laurent, governments at all levels all over the world are now accumulating massive deficits, described by some as on the scale of World War II. Has anyone examined how in Canada we will dig ourselves out of that big hole? Will it mean tax increases? Will it mean that commitments to big spending, such as pharmacare, will have to be delayed for a long time?
Well, so the counter to that question is, are there things that we don't want the government to do now to help us not dig as deep a hole, right? So obviously we're in a situation where, the governments have done and will continue to do a tremendous amount to try and mitigate the impacts of the crisis on essentially cash flows of firms and households. Now, obviously that means higher levels of indebtedness. Now, what's great in some sense about the kinds of measures that are being considered is they're point-in-time measures, right? So it's support, for instance, you spend a ton of money this year, you're not going to spend that money next year, because it's a program that kind of falls off the charts. Now, debt is higher, obviously, but the deficit should correct reasonably quickly if these measures are as temporary as we imagine them to be. So that leaves you with the question of, well, how much debt are you happy to run as a Canadian? And we may end up with a debt to GDP ratio of closer to 40%. It's about 30% now, which is still extremely low by advanced country standards, but obviously significantly higher. And the only way you get that down is over time is higher taxes or lower expenditures. But that's a question, we can worry about that in a year from now when this stuff is comfortably behind us.
JF, follow to you, and that is from Vicky. What about the Canadian dollar? Will it keep getting weaker? Will it bounce back? And I'll extend that question to say, what are the factors that would underpin a move in either direction?
Well, the Canadian dollar has been smacked by two things, right? First is the oil price decline, which obviously matters tremendously for us, right? Oil's moved $40 in the last couple of months, an incredibly rapid and significant move. That leads to weaker Canadian dollar, leads to weaker kind of commodity currency. So we're part of the countries that have been affected by this. And of course, you overlay on top of that something that is affecting everybody, which is in the current environment, there's a rush for safety, and in that rush, folks want U.S. dollars. So there is a tremendous move away from other currencies into the U.S. dollar. So that is, those two factors account for the big moves we've seen in the Canadian dollar. It's fallen 68 cents over last week. It's a little bit higher now. But the prospects for a significant reversal really depend on, firstly, a move back up in oil prices, which we don't really see in the short run. And secondly, a sense that, we're in a bit of a better environment, that, for instance, the situation in the U.S., and I don't want to put too much weight on what's happening in the U.S., but at the end of the day, they are the largest economy. A sense that, the U.S. is taking the steps necessary to contain the virus and that will limit economic damage so that folks feel a little more comfortable about the state of the world. And as that happens, if it happens, you should see some of these kind of safe haven flows unwind and people being more comfortable going back into the Canadian dollar, the euro, other currencies around the world that have suffered as a result of folks just being really, really scared.
Shauna, this question is about the Canadian manufacturing sector. It comes from Catherine, and she asserts that given that Canadian governments around the world are tightening borders, it seems to have highlighted our dependence on imported goods, especially for critical items. To what extent, she asks, do you think there will be an increase in domestic manufacturing as a result of this? And I think kind of inherently a two-part question. There's the short-term reality of what we need when border traffic is constrained. But then in the fullness of time, is this a resurgence for Canadian manufacturers, or do we just go back to the basics of supply and demand, and Canada just hasn't been all that competitive in the last
I think the problem is manufacturing is pretty much a global affair. And a lot of what we've seen in Canadian manufacturing and the decline in Canadian manufacturing has just been a result of, global consolidation of large multinational companies deciding to build it or assemble it somewhere else. To have a resurgence of Canadian manufacturing, we need a resurgence of Canadian manufacturing businesses that want to make at home. Canada is a fine place to manufacture, but those decisions I don't think are really made in Canada, unfortunately.
Another sector question from Michael here. Why hasn't gold appreciated? Got this reputation as being the safe haven. Things are very unsafe for a lot of people, and yet we haven't seen a burst in gold.
Yeah, it's had a pretty wide range between sort of 1680 and 1450. I think the luster came off gold a long time ago. There's other things to speculate in that are non-US dollar denominated assets, such as Bitcoin or cryptocurrencies. But I wouldn't lose faith because, the Canadian mining, the global mining industry got their cash costs down substantially lower, sub $1,000 or sub $1,100 in a lot of cases with the majors. And so gold at 1,500 is pretty cash flow generative. So I think those stocks may see some kind of resurgence going forward.
Kevin and JF, maybe second off, is what are the countries that we will look to in the months to come on from an economic and financial perspective? That question coming from Johan. I think it is a good one. It is very hard to imagine having the time to pause and think about these bigger, broader questions. But for those people who are spending some time on their couch, maybe they could. As we look outside our borders, Kevin, first to you, then follow on to JF. Are there countries that we can learn from? And if so, what would we learn?
Yeah, I'm most interested in what's going on in Germany. We certainly have a fiscally prudent streak here in Canada. It's not as stiff as it has been in the past, but it's still there. But that is nothing compared to the fiscally prudent streak that exists in Germany, and they really have gone all in. They have thrown all their cultural wariness about deficits and debt aside to attack this problem, keep their companies alive. So I'm curious to see how that plays out, how that works. I mean, I guess I have no reason to think that it won't. And I guess I'm also of the mind that we probably have a lot to learn from what's happening there.
JF, brief answer from you. We're going to sneak in one more question.
Well, this is less a question of what is there to learn, but what is there to be fearful of and watch. And to that extent, I mean, it's I think in our minds, it's largely about the U.S. still, that as much as we may do things here to contain our situation, to stimulate ourselves away from a worse outcome, if at the end of the day, the Americans mismanage this and send themselves lower and don't manage to contain the virus and we end up getting it back, that is, I think, a very, very critical thing to be mindful of.
Shauna, for you first, and then second to JF from Fred. Shareholders are paid or penalized for taking risk in a capitalist economy. How do we make sure that the taxpayer is appropriately paid for taking on those risks, for rescuing shareholders in the current environment, which in the past hasn't happened in Canada?
Okay, I don't know what you can do about that. Nationalize, all public companies. I mean, these the investing public, the capital markets, are going to continue functioning the way they do. And if you want to, divert it away from taxpayers, I don't know how you can do that because shareholders are taxpayers too.
Yeah.
Right. And the people that own these funds are large pension funds, which are, giving money to beneficiaries and mutual fund holders that are saving in their RSP. So, I think we are all sharing the burden in some way. It's just that sometimes the capital markets get demonized in the process.
Quick response on that, JF, before we wrap up.
Yeah, I agree. I mean, one thing to keep in mind is the nature of this particular kind of economic catastrophe, right? This is not the result of firms mismanaging their affairs. This is not the result of, increasing production to unsafe levels or managing the balance sheet in a terrible way, as it was in 2008, 2009 for some sectors that received bailout money, right? This is basically governments telling firms, you've got to stop producing stuff, and taxpayer money being used to try and help either those firms stay in business and households stay solvent for a little while. So I don't really think this is in kind of an environment where the interests of the taxpayer and the interests of corporations are vastly different. I think they're quite well aligned in this particular circumstance.
So my last question to each of you is, in one sentence, what would you say when this is all said and done? What will have changed for Canada economically, financially? Matt, the king of one sentence answers, I will ask you, what would you say will have changed when all this is said and done?
We're being reminded for the first time since the Second World War how reliant we are on supply chains for essential goods that we do not understand. And to that point, I'll just say, I'm not as confident as Shauna is about the security of our food supply.
Shauna, what would you say will have changed when all is said and done?
I think increased vigilance about how our own behavior with each other and awareness of what can impact our healthcare system. Maybe the handshake disappears in the future, but I think there will be an increased vigilance about how our interaction can spread globally. Almost like we now take shoes off when we go to onto an airport.
Kevin.
I'll echo Matt and put the emphasis on supply chains again. I think Make in Canada, which is, I've written series about this over the last 10, 15 years, always kind of hollow, kind of shallow, not always a lot there, but I think Make in Canada might start to mean something again, as it will in lots of other countries. I think companies will realize that they can't rely on getting all their inputs from one region or one country.
Jeff.
I'm hoping that as we come out of this, we end up with a more united and well-integrated country.
One of the topics we did not have time for, but maybe in a follow-on discussion we will, and that is climate change. It was a big, big theme for our event in January, and certainly our connection to the natural world, a virus that is being spread in natural ways and not connected to technology or finance or transportation. I think there is a link there, and that may be fodder for us down the road. But it is time to wrap things up. A huge thank you to our panelists today: Kevin Carmichael, national business columnist, Financial Post; Matt Gurney, columnist, National Post; Shauna Sexsmith, senior portfolio manager, Manulife Asset Management; and Jean-François Perrault, chief economist at Scotiabank. Thank you all for joining us. We will have more virtual events to come. Stay tuned to your email. We will announce them there. I do want to say thank you so much to our partners, the National Post, to our sponsor EY, and also to our technical partner, Van Valkenburg Communications. They have been our audiovisual partner for the past 45 years. So a big thumbs up for them. They do a lot for us. To you who have dialed in from your homes, wherever that may be, please stay healthy, take care of yourselves, take care of your family, and we will join you again soon. Thanks so much for joining us today.